Hi and welcome to this week's video analysis for the FX majors going into the week 20th of May 2019. We're going to start off going through the calendar, just highlighting what reports or financial releases we've got through the week. Then we're going to break down through the different currencies, starting off with the dollar index, going through all the FX majors up to euro yen, basically breaking down time frames, highlighting what we're seeing, basically our support and resistance levels, or basically the bias that we're looking at going into this week. So as I said, let's quickly look at the calendar. We've got Fed Chair Powell speaking pretty late on Monday. Otherwise, we've got a pretty limited data release day on Monday. Tuesday, very early in the morning, we've got the RBA minutes, and the Governor, Lau, will speak. UK inflation report that day, and then late into the night, or at least for us in the UK, we've got the retail sales out of New Zealand. Wednesday, we've got UK CPI figures, consumer price index inflation figures. We've got Canadian retail sales, and then the all-important FOMC minutes. So Wednesday, really midweek, is potentially one that could change market sentiment. We've got all the PMI figures on Thursday out of Europe, and then Friday we've got really limited data releases as well. We've got some durable good figures, but they have a tendency not really to move the market anymore. Okay, so let's go to the charts. This is the dollar index weekly chart. Here we can see really a prolonged period of what we would call indecisive price action. So a lot of peaks and troughs, a lot of inside bars, outside bars. Last week we posted a bullish outside bar on the dollar index. That normally highlights a strong buying sequence. That should mean that this week, at least the start of this week, we should be buying into dips. However, this wedge formation, as long as it holds and the trendline resistance is at 99 the figure, excuse me, then the bias, the eventual bias, is to break to the downside. If we do look to the MACD, we can see that we've lost momentum. Okay, this is the trend, and then basically it's running flat, and that's what happens a lot when we get these ending wedge formations. If we go to shorter time frames, and this is the daily chart, we can see that that last move up is pretty impulsive. If we go to the 4-hour chart, 98.47 is a 261.8% extension level. That would give us a higher high. Worth having a look at the RSI if we get up to these levels, and then probably express a bit of caution up around here. Okay, so to reiterate really what we think we're looking at, I think we're looking at dollar dip buying at the beginning of the week, but being wary, obviously going into Wednesday. 98.47 is the intraday 261.8% extension level, and then we've got that trendline resistance located at 99 the figure. So this is really the band where we could potentially sell into dollar strength next week. Okay, euro dollar weekly chart, still trading close to 61.8% Fibonacci. Outside week last week normally indicates strong selling. If we go to the daily chart though, we've still got these two wedges. So we've got this large wedge formation, which has a trend line down here, 110.37 ish, and then we've got this inside wedge with a trend line support at 110.74. Again, we've got potential for some divergence if we get down to new lows, and that's something to be aware of. Beginning of the week, we've got an ABCD formation, which we mentioned in our report on Friday. That's located at 111.40. Beginning of the week, we've got some pretty strong resistance located at 111.98. Sterling dollar, strong selling. Let's go to the monthly chart first, because this is something that we've talked about quite a lot previously. We posted a bullish outside month, and then we continued well, we saw dip buying, and then we continued to the upside. Now we've seen quite strong selling pressure to keep this count alive. Then, and we're talking about a DMARC count here. Then sterling dollar this month, we've got a few days left. We've got to close this month above 131.06 to keep the count alive. So it's got a bit of work to do if that's going to happen. 131.06 is basically the closing price of this candle, the January candle. If we go to the daily chart, it was quite impulsive, that move to the upside. Then we had this corrective move, and then another impulsive move, which did look like we were going to break to the upside. We've even broken this trend. Let's just get rid of that. We've even broken this trend of lower lows. We've broken through the 61.8% Fibonacci pullback level. Is this a corrective sequence? That's what we're going to be asking ourselves. Is this an AB CD formation? An area to be wary of going into next week is here, 126.29. As far as Elliott Wave's concerned, it's holding onto the fib levels. Small correction here, so 126.29. Let's just have a look where our resistance levels are. I think they're quite a way to the upside. We've got some resistance at 127.94, and then we've got more resistance at 129.18 going into this week. One thing that we should note actually is that DMARC has posted a 13 count on the daily chart on sterling dollar. So this area here I would be very wary of going into next week. Dollar Swiss, again, it's pretty mixed, pretty volatile trading. We posted a bearish outside week on the 6th of May. That normally results in some follow through selling. We haven't seen that. If we go to the daily chart, we can see pretty strong bearish channel formation, but them inside days, and although we sort of broke out of that inside range of this candle on Friday, that rally was pretty limited. We've got a 10 count on the daily chart. That could mean that we see another 3 days of buying next week. So if you think about it, we've got that Wednesday report, Monday, Tuesday, and then perhaps a sell-off on Wednesday. Like I said, it's pretty mixed trading in dollar Swiss, and there's no real strong signals about at the moment. As far as our support and resistance levels are concerned, we've got resistance to the upside at 101.67, and to the downside we've got support 100.57 going into this week. Dollar yen, bearish outside week. Sorry, I want to show the weekly chart. So we've got a bearish outside week posted. It was near the top of this trend line resistance. Moved through the cloud, but the base of cloud, or underneath the base of the cloud, Ishimoku cloud, we're seeing some buying interest. If we go to the intraday chart, Elliott Wave, we've got a gap open here. Gaps normally get closed. 1, 2, 3, 4, down in 5. Move up's pretty mixed, volatile. Going into this week, we've got resistance at 110.85, support at 109.07. Dollar CAD. I'm just going to show this chart first, which is a weekly chart. Got a bearish outside week, close to the 61.8% Fibonacci pullback level. We saw impulse selling, then seen pretty corrective, choppy move to the upside. We've got inside soldiers for 3 weeks now on dollar CAD, and that basically highlights indecision. And if we go to the daily chart, we really can see that indecision, but we still look to be inside this wedge formation. The bias is to break to the downside. We've got trendline support at the beginning of the week, 133.78. We've got some bespoke support at 133.75. So even toward the latter part of last week, and the RSI is flatlining, so that basically highlights that we're non-trending. But even towards the latter part of last week, we were still trying to buy dips in dollar CAD, and we weren't getting those dips to buy into. It's not really doing anything. To the upside, we've got a 78.6% Fibonacci pullback level, 135.37. We've got this trend line resistance at 135.52. As far as DMARC is concerned, we have posted a 13 count on the weekly chart, but I believe the stock will be up here somewhere, around about 130, 136 the figure. But for those that are looking to get short, this range doesn't seem too bad. Relatively tight stop for a medium-term trade. 261.8% down here, 130, 143 at the moment. That's as long as this high holds. The wedge has a target down here, 131.12. Aussie dollar. It surprised a few people the strength of the sell-off in the Australian dollar. Again, if we look at wave formations, all these waves are made up of three waves. All these moves: 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3. We've got an AB equals CD formation target located here, 168.51. We've got a 78.6% Fibonacci pullback level at 68.62. So unwise really to sell into the open at the beginning of the week. Resistance is located at 69.65. There's no real clear indication at the moment that this trend is coming to an end, but there's warning signs or target levels that that traders are probably looking at. So we could see a reverse in sentiment in Aussie dollar. Euro sterling. Let's talk about this chart first. We were trying to buy dips. This was our bespoke support level. So AB equals CD was here. We've got bespoke support here, 84.60. We were short basically. This month we're likely to post a bullish outside month. If we go to this chart, we have got this wedge formation breakout. Okay, the measure move target for that is around about 83 the figure. We've got reverse trend line resistance here at 88.87. So that's the top side resistance. Support to the downside, I'm going to show this daily chart, is here, 86.70. And it's also an area that's been pretty pivotal for euro sterling. Interesting actually, if you're looking at the daily chart, there's a technical analysis rule, rules are there to be broken I suppose, is that the rule of 9, and that will dictate that if you get 9 positive or 9 negative days in succession, then you should have at least a correction to the downside. Now we can count on 9 here, but it's that the power of this trend, we've just kept on moving to the upside. So at the moment we're still looking at buying into dips, like I said, around about 86.70 at the beginning of next week. To the upside we've got that reverse trend line resistance. Euro sterling, and I'm only going to show one chart here. And again, you can see these inside waves, 1, 2, 3, 1, 2, 3, 1, 2, 3. We've got a 61.8% Fibonacci pullback level. We've got trend line support around about 122.05 to 15. Again, we've not really seen any sort of reaction. Are we going to consolidate until Wednesday? To the upside, resistance which needs to be broken really to turn the bias to the upside is at 123.43 at the beginning of the week. Still got that gap open as well here. Okay, I hope you found it informative. There's not a lot to go at the moment. I think the FOMC on Wednesday, well, I'm hoping, because I'd like to see a bit more movement in the markets, is going to be the catalyst for potentially the next move. Okay, I wish you all the best for this week, and I'll speak to you again next Monday. Many thanks.